Back to Druck's portfolio. So on banks, he still likes banks. He picked up Sally Mae. This is a clever idea, actually. And it makes a lot of sense when you think about the regulation one can expect in the Trump administration. Now, Sally Mae really was a leading private student lender prior to the Obama presidency. And that presidency really transformed student lending and to the detriment of Sally Mae. So it looks like he's betting on a pendulum reversal back to maybe more private student lending, which would benefit Sally Mae and maybe other services in the market. So I want to dig into that. I thought it was just a clever idea. He has some other banks too, like First Horizon and USB Bank. We did take a closer look at USB Bank, and you can see it there. I think it's interesting. Although I think quite a few regional banks are interesting, although the European banks are even more appetizing. If we look at the statistics we just described not too long ago. So he's also got an emerging pharma bet. So he picked up Pure Cycle Technologies, and all these stocks like pumped real quick. I want to chase these. Look at this. That's the Druck effect, up 16% on high volume. So wait for this to come back and then reconsider, reassess. We don't own this, but it's on our tracker. We'll take a closer look later. The way we prioritize our research is if there's a good entry, then prioritize the research. And if it's on theme, prioritize it. If it's not, then you have time. So that's how we triage the work we're doing on our side. What else? He picked up Verona. He's got exposure to Teva, which is a generics pharma company. And Teva got a bit of a bump today as well. I'll share my screen. Also has an interesting entry. So what's not clear is what is Trump's America First policy for pharma and how does that interact with Teva, which is an Israeli-based company? Obviously, generics can play an important role in reducing the cost of medicine. And it's cheap. Forward PE is 6.5. So I do think there's an opportunity there. We do own this. You're waiting for regulatory clarity. What exactly does RFK Jr. want to do at the Department of Health? Pharmacy stocks are very cheap right now, and they've sold off. They've really corrected because of this regulatory risk. So interesting to see him pick up that. Now he got a couple of semis as well. Western Digital, for example, really betting on data centers via the demand for memory. And memory, you need hard drives, you need terabytes and terabytes of data to store all of your personal information and trust that in the hands of big tech companies. Argentina, he added to BMA. This is one of the Lumida stocking stuffer stock picks. I love this business. We bought more this morning, actually. And they are the leading private bank in Argentina. Argentina, of course, has done really quite well since the new prime minister, Milei. And if you look at this stock has gone up 192. And again, the PE ratio is 8.2 forward. Again, this is what I look for: momentum, value, and it's a quality business model. Private banking is a good business model. Banking is a good business model. If you take a bank and you give it wealth management, you're taking two business models and putting together. That's actually the vision for Lumida, by the way. I want to buy a bank one day and then build a private bank, and Lumida Wealth is the first installment in that. It's a good business. First Republic had this business model. First Republic, when General Atlantic bought it from Merrill in 2008, they paid about $1 billion in change. They took it into public markets, and it 40x in public markets before it went to a zero. But went to a zero not because of the business model, went to a zero because the CFO did not sell their fixed rate mortgages. They did not securitize them. They're supposed to sell to JP Morgan. They did not do that. So they were upside down on their long-term yields in their mortgage book. Fantastic business that JP Morgan picked up. Subsequent to that, we bought JP Morgan because we knew they're getting a great asset. That was back in spring, obviously. What else? So he also added to GGAL. We actually like BMA more. We did own GGAL, but I think on a relative valuation basis, BMA is better and a better business model. So qualitatively, we prefer BMA. He also picked up in Wabtec. Oh, he owns Flux. This is one of our names too. This is actually an Illumina stocking stuffer. This is indexed to the data center theme. So Flextronics, I look at them as like a cheaper version of Celestica, which we've owned and we've really enjoyed that. It's got good earnings growth. The valuation is fair, right? You're talking like a 17 times trailing, 15 times forward PE. He also reduced his KRE exposure. So KRE is an ETF for regional banks. And let's pull up KRE to see what his thought process was. So these 13 Fs are filed December 31st. Druck loves selling into parabolas. That's a common theme that I see every quarter, right? He sold NVIDIA around March or April, and he never looks back. When he rotates out, he moves on. So my guess is that's what he did here. He also, in fact, he sold out of VST, independent power producer, right? There are three major IPPs, Constellation Energy, Talon's another one. We own Talon. So he sold out of VST. This is a name we owned last year, actually. So take a look at VST. We sold out of VST here in this, right when that arrow was. There's a nice little mini Bravo there. But he sold out of GEV as well. That is a spinoff. All the GE spinoffs have done quite well. Obviously, the stock is expensive now, and he's not in it. So he really knows how to get out while the going is good, and then these things just consolidate and go nowhere for some time. He times his sells very well. He sold KMI. KMI we mentioned last quarter. So in the last 13F, we pointed out how Druckenmiller owned KMI. This stock also got really hammered during that DeepSeek news. In fact, we talked about it on the podcast. And take a look. So again, he timed his exit very well. Druck is good at getting into ideas before other people pick up on those themes, and he's really good at rotating out. Now, here's a surprise theme. I think people may not be focused on this, but airlines. So he owns United, American, and Delta. Funny enough, my team and I were looking at this category last Wednesday, and we have a CIO call every morning, 7 a.m. I drop some live thoughts in my Telegram chat. And I remember on Wednesday, I said, hey, airlines look good, momentum strong, EPS growth strong, valuation's great, consumer strong. And they're not really engaging in competition like they used to. Each of these airline companies have discrete segments that they focus on and certain hubs and certain routes that they tend to dominate and own. So if you take a look at American Airlines, we bought this name, 6.74 PE, 13 times trailing. They're paying off their debt. It's a highly indebted business. It's got a debt payback yield of 26%. I'm not worried about the high debt because capital markets are open. And I think long-term rates stay under 5% here. And they're generating a ton of free cash flow. So I think the debt payback is actually fine. I think it's okay to have leverage, provided you don't have near-term liquidity risk, right? You got to make sure interest coverage ratio is adequate in the near term. Obviously, these guys have a major hub in Dallas, Fort Worth, and Chicago, LaGuardia in the New York area. So we like this because of the value. We like the debt payback yield. I don't know if we'll ever see airlines have share buybacks, but if that debt gets paid off in a couple of years, maybe. I don't think they will. It'd be really funny if that happened. Airlines are a category that Buffett famously ignores, and he just doesn't like to invest in. He did invest in Delta, and then he sold it on the bottom. So here's Delta. He sold it in one of these bottoms, like somewhere in the post-COVID era, and Delta's done well. Also, we own Delta. Obviously, Delta has the Northeast corridor, right? Boston, New York, DC, that route, the shuttle commute route. Fortunately, no lives lost in that tragic accident we had yesterday. But this is an interesting idea. So you've got a valuation that is attractive and a strong earnings growth, right? Let's take a look at the earnings growth. Now, these are analyst estimates. Analysts are often wrong. So I try to handicap, are the analysts can be wrong in the upside or wrong in the downside. My view is that the consumer is stronger than most people think. And we're seeing that in a number of different surveys and data. So 39% earnings growth next year is the analyst estimate for December 2025. And they show more moderate earnings growth in 26 and 27. This is similar to the cruise theme, right? Cruise stocks have done really well post-COVID, right? Royal Caribbean, Carnival Cruise Lines. Now, those names are getting more expensive. They're certainly more expensive than airline. If you want to go on a cruise, you got to get on a plane to go to the cruise ship. And so this theme is an interesting kind of idea. It's like a fast follow theme, and it's indexed to travel and leisure. And quite a few travel and leisure stocks have done well. They've reported earnings, they've beaten, and this is a boomer economy. What are boomers doing? Boomers are spending on travel. In fact, we've got a whole theme indexed to boomers. What are boomers spending on? They're spending money on insurance annuities. They're spending money on wealth management, stocks like LPLA. They are also spending money on travel and restaurants. Follow what the boomers are doing. Who's talking about the boomers? I think it's a great investment theme. So we like the boomer theme. So there's Delta. Maybe sold off on some of the news that took place recently. We'll see. Arguably, some of these are extended, so you can position size accordingly. It's right there in the 50-day. I think that's not a bad entry point. So to get a starter position there. So that's it. Druck is involved with airlines. I think that's a clever idea. If you believe the economy is strong, I think that move makes sense. Other travel stocks are more expensive than airlines. It's a cyclical business, by the way. These are not businesses you want to own in a recession. there's no evidence of a recession in sight. Our view is that we have the hot landing thesis. The economy is stronger than people think. That's been our view for the last 2 years. And I don't see that changing. In fact, airlines might also benefit from the focus of Scott Bessent, Treasury Secretary, to lower energy prices. They want to get oil prices low, and they want to get the 10-year low. So if you have a lot of debt, then you can refinance. I was listening to the Odd Lots interview with Howard Marks, one of these legendary cross-asset private and public market investors. You're supposed to read or listen to Howard once a year. It's like going through a car wash for your brain to reorient on first principles. And he had very good observation that bears repeating. He says, debt is never paid back. Debt is refinanced. Debt is never paid back. Debt is refinanced. Anyone that has taken a 30-year mortgage and has moved homes knows what that means. Average duration of a mortgage is about 5 to 7 years. So in the case of highly levered firms like an airline, I would expect that they will have access to favorable refinancing conditions. Capital markets are wide open. You'll get an IPO market later this year. The bond market is doing fine. Look at high yield credit spreads. They are tight. So there's ample opportunities to refinance. Debt always isn't bad on the balance sheet. It really depends on the broader environment.